Just looking at those Santander results, this is possibly one of the better placed European banks, international banks. But my goodness, when you look at those figures and break them down, you just realize just how precarious the situation is because of their exposure to the home market.
Yeah, that's correct. I mean, clearly the exposure in Spain that Santander has weighs on their results at the moment. It is, I would say, though, I mean, considering what is going on in Spain and in the south of Europe more generally, it still is a surprisingly decent result, I would say, because a big part of the miss is actually an extraordinary charge for the UK payment protection insurance that we've also seen at Lloyd's in the first quarter already.
So why is it one of the better performers? Is it because of its global diversification, Latin America, Brazil in particular? Here in the UK, well, actually, things weren't as bad as perhaps we were thinking that it would be because of bad loan provisions.
Yeah, I think it's precisely that, the global diversification. And I think having that global diversification in Latin America, in the UK and other places, as you mentioned, I think has allowed Santander in recent years also to be less aggressive in the highest risk segments of the Spanish lending market, and I think that benefits them now relative to their domestic peers.
Now we're in the middle of the earnings season, and we have had those disappointing results from a whole host of banks that I just mentioned. Trading and investment, that seems to be the most disappointing. Just why are we seeing that now? Just because of the European debt crisis and the market conditions just aren't right for trade?
Yeah, I think it's a mix of factors, really. I think market conditions are probably the most important in my view. There are some areas of the market where volumes just haven't been as strong in the second quarter as they are sort of on average, let's say, so that impacts it. I think there's also an element that trading results do actually tend to be somewhat directional. So if markets go up, it's easier to make money, it seems, than if markets stagnate or go down a bit like we've had in the second quarter.
So what should we be looking out for as we go into the third and the fourth quarters? Do you see the climate changing into a positive way for these banks?
Yeah, well...
Put you on the spot.
I mean, I don't think the underlying sort of earnings generation power that banks have, I don't think is really improving strongly. I mean, if you look overall at lending volumes and sort of transaction volumes, I mean, which are the main drivers of underlying earnings, they just aren't really growing that strongly. So really a bit of a more pedestrian revenue generation. On the sort of, provisioning asset quality side, I think there'll be sort of different trends, really. The north of Europe seems to do a little better than the south for obvious reasons. And yeah, I think sort of, nothing too great, but no dramatic downturn.
And I suppose the general climate as well, you have to ask just how prepared some of these banks are for the extra burdens regarding of the debt exchange for Greece and also raising capital requirements.
Yes, no, that I think is true. I mean, Greece clearly is an extra burden. I think we'll see some of that potentially come through earnings in the second quarter, some of it maybe in the third also. Overall, it looks like we'll get somewhere, 25 to 30% write-down potential on banks' holdings. I think we've seen from the stress test that the Greek exposure alone will not really sort of be a massive problem for the banking sector, but clearly it weighs on challenges.
Certainly does. Otto Dichtl, thank you very much indeed for your insight.